And for that, we are joined by Diane King Hall to hear. You have Morning Movers and, of course, our lunchtime fast market. Tell us more about some of the names you're watching, beginning with Molina Health.
The healthcare sector, it's causing a downdraft across the healthcare sector. Molina Healthcare out the gate down double digits, under heavy pressure right now. That stock sinking more than 20% off the back of not just its latest report, but its guidance. It's cutting guidance for the third time this year. They reported much weaker than expected quarterly results. Earnings per share came in at $1.84. You put that in perspective, the street was expecting closer to $4, so it's a big miss here. Revenue did beat estimates, but it doesn't matter in the context of the bigger picture here. Revenue coming in at $11.48 billion. Their full year EPS guidance is now $14, down from the prior guidance of no less than 19. So again, it is the third time this year that they are reducing guidance. They blamed unprecedented medical costs in its marketplace business. Those are the plans that we know that are sold under the under the Affordable Care Act. Those costs reflect higher use of medical services, sicker patient pools. So that's a challenge for them. The Medicaid plans are holding up better. Strong margins there, though, despite some cost pressure. Their medical care ratio, that's what it spends on patient care, that rose to 92.6%. That essentially means less profit per premium dollar here for Molina Healthcare. So again, you're seeing shares under heavy pressure. It's causing a knock-on effect when you look across the sector. You've got Centene under pressure as well. United Health had been under pressure. I'm not sure where that is at the moment. But again, this downdraft hitting the broader sector there. Molina Healthcare down 19% now, Nicole.
And United Health down 1.5%.
Okay, thank you for that.
And look, you have some of the others. Centene down 7%. And so that's the health story. A big move there for Molina. And then we take a look at some of the airlines. You're covering American first.
Yeah, American doing better than expected, swinging, or the loss, not as bad as expected. They reported a loss of 17 cents per share. So the street was expecting a much worse loss there. Revenue came in at $13.7 billion. That was also better than expected. They're also now expecting to turn a profit for 2025. They're guiding for for the fourth quarter, they're projecting earnings between 45 and 75 cents per share. That's tops analyst estimates. For the full year, they're guiding for between 65 to 95 cents per share, well above estimates. Traffic was up more than 1.5%. Domestic demand holding up well. There's a trend you'll notice that's similar to what we heard from, say, Delta and United. Domestic demand is holding up, especially for business and premium travel. International sales came in a little bit softer, but again, the demand picture shows that the strength is there. Consumers, especially business travel, is continuing to come back, especially with people back in the office again. So they're doing the business travel. Premium holding up well. Capacity is set to grow between 3 and 5% for the fourth quarter for American Airlines. So they're heading into what they're deeming a strong finish to the year. So again, I just want to reiterate that was that smaller than expected loss. So it looks like things are really turning up for American Airlines in terms of market reaction right now. Those shares rallying more than 4%. American needed this win, especially in the context of how it's performed compared to the other airlines, because it's been down heavy this year, down more than 20% so far this year.
And then we had heard from LUV. That was some good news there, though it has a down arrow today.
It does. It's been all over the place in reaction to its results off of Southwest, because initially when they reported, the stock was higher. They reported after the bell yesterday. They posted a surprise profit for the quarter. They're expecting record sales to close out the year. In terms of the trailing quarter, they earned 11 cents a share. That beat expectations. Again, the expectation was for them to report red ink. They didn't. They swung into the black. They posted revenue of nearly $7 billion, so that was better than expected. So again, better on the top line, better on the bottom line. Demand staying strong heading into the key holiday travel season. And listen, I mean, Southwest has been one of the budget airlines, so the view was that, you might not see as robust numbers as you did compared to, say, a Delta or United, but they've done well. Keep in mind, Southwest is also doing away with the open seating, so that's out the window there. And the 2 free check bags. That's been a longstanding policy that's kept consumers loyal. But what you can see is even with the plans to make some shifts to what had been a very like egalitarian airline, it doesn't mean that consumers aren't flying with them anymore. So bags don't fly free anymore as they previously had, but the executive saying the early results from bag fees and seat upgrades are already helping to boost sales.
Well, that's what we've seen, a lot of more expensive seats desired by the travelers. We heard that from Delta a while back.
That's right.
Very interesting. All right, Diane King Hall, great to see you. Thank you for that. I'll add in, folks, I'm seeing Las Vegas Sands to watch those casino names. A lot of positive comments from the analysts there. That's up about 9.5%.